So there is no need, especially after today, we had the Summit of the Future discussion, when Jean-Claude was started very pessimistic, but he ended optimistic. We'll just have short views on three small topics, question. First one is, there is a recent World Economic Outlook had a title, Moderate Inflation and Steady Growth, Open Path to Soft Landing. So the first question is actually, can we be, last year everyone was afraid of inflation. And it looked like the things are going in completely wrong direction. And there was a fright, serious fright, that maybe this year is going to be just leapfrogging, and that would be the death of overall economy. But it looks like things are going in a better direction. So first, I would thank you, Jean-Claude, and I think inflation. Can we give us a little bit more optimism? Then I'm not pushing you in that direction. Be realistic, but please, I mean.
Yeah. Well, it is very serious because everybody will check whether what we say is right or wrong, of course, and we have to be very cautious. But I really am impressed by the fact that the central banks all over the world, including in the developing world, including in the advanced economies, have taken inflation much more seriously this time than they did in the first and second oil shock. You might remember there was benign neglect that was practiced at the time. We had inflation galloping. In many countries, you had hyperinflation. In the advanced economy, 14% inflation was something which was considered normal, if I may, after first and second oil shock. And we had the necessity to regain control of the situation in this extremely difficult situation, with interest rates skyrocketing in the US at the level of 20%. Paul Volcker regained control of inflation in the US with extremely high interest rates. So when we are speaking of 5%, 4% on both sides of the Atlantic, and persons also in the developing world, in the emerging world, it's totally different from what we knew a number of years ago. So I take it that the central banks, backed by our people, took the fight against inflation very seriously. They were, in my opinion, right to do that. And I take it that it is not, I would say, too optimistic to think that they will regain control. Of course, it called for 11 increase of rates in the US, 10 increase of rates in Europe, many increase of rates in the rest of the world. So a level of seriousness, a level of responsibility which is visible and documented, if I may. Now, that being said, a dramatic change took place after the Lehman Brothers crisis, the great financial and economic crisis. And that change is that a number of central banks, I would not say all, but a large number of central banks have decided to give the arithmetic definition of what is price stability. So they gave a benchmark to measure what they were doing and what was their goal. And they said 2% per year as an average for the core inflation is our goal. They said that to their own people, they said that to their own economy, and they will be controlled on the result. But of course, it helped considerably the economy to have some kind of appropriate anchoring of expectations. And that was the lesson of Lehman Brothers crisis. Let's anchor better our expectations, including inflation. So I think that it is not absurd to think that the central banks of the world will really regain control, also helped by the fact that we have an arithmetic anchoring of what is price stability. And I take it that what happened just before the Lehman Brothers crisis and immediately after the Lehman Brothers crisis, including in the US and Japan, with all, I would say, central banks that are issuing currencies that are part of the special drawing rights basket, have now, at the moment I'm speaking, the same definition of price stability. And that was my response to your question, Mr. Prime Minister.
Well, thank you. I mean, this is very optimistic note. I mean, very solidly based on facts and very clear thinking. So, I mean, we have a reason to optimism. The question that relates to that is actually because you are known as someone who stabilized debts a long time ago, serious debts, state debts, and different type of debts. As a result of COVID and latest turbulences in the world, there was creation of a lot of money and pumped a lot of money as in stop, let's say, COVID, stop a lot of economic damages. And as a result of that, we have piling up the loans and the debts that are growing besides, especially for developing countries. Now, my question is, what we can do, can we, I mean, especially today, you were talking very clearly about financing sustainable development. And one of the issues is actually how to do financing, but that financing is related to covering and consolidating the existing debt crisis. So that would be my second question.
Yeah, I would say, again, in this domain, you're right. We have a level of overall indebtedness, both at the global level, in the advanced economy, in the emerging economies, or many emerging economies, and in the poorest country of the world, which is too high, much too high. And I'm speaking of both private debt and public debt. And in the occasion of the panel you were chairing this afternoon, I said that my own understanding is that all taken into account, as in I would say, indebtedness of the global economy through many, many indicators, we have a situation which might appear as even worse than what we had before the Lehman Brothers crisis. So this is serious. The financial sphere, the financial area, and the overall global economy might, if we take that indicator, be more vulnerable today than we were at the moment of the Lehman Brothers crisis. And of course, everybody recognized at the time that this crisis was also due for a large part to the over-indebtedness of many entities the world over. So you asked me what to do with this situation. First of all, be aware. Let's be aware of that situation. Let's concentrate on the most vulnerable countries, the poorest and the most vulnerable. I think there is in the IFIs, in the international financial institutions, a clear awareness that this is key and that we cannot let the poorest countries and the most vulnerable deal with their over-indebtedness alone, without help. So that is a very, very important point. If you asked me, are we doing sufficiently, I would say no. We are not doing all what we have to do. It's not only a question of, I would say, global instability, it's also a question of being aware of the needs of the poorest of our fellow global citizens, if I may. Now, I have to say that the central banks, which were extremely accommodating, as I already explained, are much less now. And they are trying themselves to help a level of deleveraging the world over, and I hope that this will work. But I said that we are in a situation which is very vulnerable, all of us, and I think it's very, very important that we are all aware of that and that we try to eliminate all the incentives to borrow excessively that still exists in many countries in the world. And that is a global governance responsibility, obviously.
Well, thank you so much for this. And last question, since we're in a country that is hosting COP29, we are in Azerbaijan that is hosting COP29, and as especially after our discussion with President Aliyev, it's obviously, that this country is leading a machine, not only for this region, but for Europe as well, and some other parts of the world in green transition. And especially that Europe is known as a continent that is, in comparison to states, United States, China, and some other parts of the world, Europe is leading in sustainability over United States. Europe is leading over United States in inclusion. But where Europe is lagging behind, it's competitiveness. Just as you said, the best parts of European competitiveness actually the public debt and current account balance and private debt percentage of GDP compared to the United States. But what else besides exactly those things that you were talking about we can expect that Europe or should do to actually be leader not only in sustainability and inclusiveness but in competitiveness as well?
You make a very important point, obviously. It's true that there is some kind of division of labor in the advanced economy and in the major, I would say, emerging economies. Some are specialized in invention, creativity, new ventures, digital platforms, and others are highly specialized in taking care of liberties, of datas, of individual datas, and of regulations, if I may. Well, if it were really balanced, I would like that, because after all, we need both. We need both regulation and we need, of course, invention, new concepts, artificial intelligence, all the new data, extraordinary big data, I would say, invention and processing. Both are necessary. But it's true that the Europeans are not, in my opinion, in a balanced situation. So this has to do a lot, in my opinion, with the fact that we are not yet a real single market. If we were a real single market, at the level, say, to oversimplify, the US and China, we will have exactly the same possibilities of growing extraordinary startups who would become the, I would say, GAFAs of the present time. We don't have that. It's our fault. It's our fault. It's the fault of the European. We have not got a single market which would be comprehensive and completed. It's a paradox because there are a number of areas where we have a single market. We have a single market of cars. We have a single market in many industrial sectors, but we do not have a single market in the digital sector. We do not have a single market in what counts. We do not have a single market in artificial intelligence and so forth. I have to say also, paradoxically, after all, I am a central banker, we do not have a single market of capital and we do not have a single banking market. Very surprising, because we started to, I would say, implement a single market in Europe, and we have a single currency, but still it's not achieved. If it were achieved, the euro would be the equivalent of the US dollar, because the main difference between the euro and the dollar is not the currency, Both currencies are excellent currencies, credible, delivering stability, no doubt. But in one case, you have only one treasury issuing bonds and bills with one signature, and in our case, we have as many treasuries as we have members of the European single currency. And of course, the liquidity and the depth of the financial market is in the proportion of 1 to 10. The liquidity of the single market of the US in dollar, but because of the treasuries, is at least 10 times and even more liquid and more profound than the equivalent in euro. Because you have the Bund, you have the OAT, you have the treasuries in Italy, treasury in Spain, and. So I stop there because it's only an emblematic illustration of the fact that we are not yet as united as, in my view at least, we should.
Thank you very much. And one applause and thank to Jean-Claude. Tonight's one of recipes of our award, but that will be after main course. So relax, and we are not competing no more with any meal. Thank you, and thank you, Jean-Claude, once more.
Thank you, Prime Minister.